excited about today. I am so excited about today. My brother, I think I've told this story before. My brother says that when I was little, I would get super excited before opening the Christmas present. Like I would have the Christmas present and then I'd be like, I'd be so excited like before I opened it. My name is Margie Remmers-Davis. I'm the founder and CEO of Acadian Accounting Education. And this is our weekly live stream that we hold every Friday at 11 a.m. Eastern Time inside our free Facebook group called the QBO Gym Locker Room. The QBO Gym Locker Room is your spot for hands-on practice using QuickBooks Online. That is what we do. That is all we do. Okay, so don't post in the group questions about your business or questions about clients. There are other groups for that. We're happy to share other groups that have, active participation, etc. This is about practicing using QuickBooks Online hands-on, okay? And so as a member of the locker room, you get all this hands-on practice. You get a free QBO QuickStart course. So if you are brand new to QBO and you are, the other thing is this group is for bookkeepers and accountants, okay? It's not for business owners trying to do their own books, okay? This is for bookkeepers and accountants, people who are doing the books for multiple clients. And so you get a free QuickBooks QBO QuickStart course, which teaches you how to get your accountant version of QBO. It teaches you how it's different, like how to connect to all of those different clients. We teach you that. We teach you how to navigate it. We teach you proper workflows. It's all an introduction to QBO. Just by being a member of the locker room, you get that free course. So if you are new, who did I say? Micah, and who else did I say said this is your first time? You're new, Kathy, I think it was. If you did not get that course, then make sure and reach out to us, support@acadian.com, and we'll look into your account. Like it happens all the time. People type the wrong email address. Or like I said, we get lost in spam. We'll help you find it. Okay, so we want you to get that course. And then there's an email that goes out that has about how to get your free exercises, but those are also posted inside the group. So inside the group, you can either go to the featured section right here, or you can there's like a featured tab here that says, and you'll see that says, welcome to the locker room, over 100 free exercises. And that's where you get, there's a link there, you get like all the exercises that shows you how to do all of the things, okay? So that is the locker room. And then also by being part of the locker room, you also get a free exercise of the week by being here with us on Fridays at 11 a.m. Eastern for our locker room live. And we're going to give you the exercise. You're going to get a chance. We're all going to walk through it together. Because I am extra, today's exercise, guys. I got to get to it. I got to get to it because, I wish I could see your face. I jokingly say I wish I could see your faces because I don't actually, because it distracts me. That's why I turn cameras off. I love you, but it's distracting. But there's going to be so many ahas that go off, like so many light bulbs. Like I wish I could see all the light bulbs. Okay, so anyway, free exercise of the week. The exercise of the week is actually part of a program that we have called the QBO Gym. So everything that I have described so far, free Facebook group, free QBO Quick Start, free 100 exercises, free live stream, free, okay? But we also have a course called the QBO Gym So the group is the locker room, the course is the gym, and the QBO gym. If you have ever said to yourself, I wish that I could be an intern for a bookkeeper. Like, I wish that I could just shadow somebody. Like, how do I get experience if I can't get a job? I can't get a job without experience. Okay, if you have said any of those things, then that's why we created the QBO gym. The QBO gym is simulated experience, getting a simulated experience as a bookkeeper. You get an entire year of um, you get an entire year of experience being a bookkeeper. It doesn't take you a whole year. It takes about 42 real-time hours, and it's about 3 to 4 hours per month, which is just like you would do, just like a real client. And you work for a fictitious business owner, and throughout the year, all these things happen to him that you have to then learn how to record. So at the end, we give you a certificate that says this person has 1 year of experience. And anyway, and you can also go on to year two. There's a second year. Um, Joel, if you are there, if you could post in that, he usually does that. I don't know why I am not seeing it. There is if you want to try, you can try out the gym for free. You can do just the first month using the 5-day challenge. So you can do a whole month of bookkeeping in 5 days. It takes about, 45 minutes or an hour to do. Um, so I don't know. Lindsay, could you grab the link and post it in the chat? I don't know what happened to Joel. I'm not seeing it. He may have gotten called away. So, all right. So we will get that. Somebody will post Lindsay Key, not Lindsay Roberts. I'm not expecting you to do it, but Lindsay Key is on our team, so she has all of the links. All right. Unless my chat thing is not working. Okay. All right. Thanks, Lindsay. All right. So, that's the QBO gym. And anyway, everything that you do in the QBO gym is linked to our proprietary dashboard, which is called Booksmatch. And Booksmatch actually tracks all of the skills that you are building and learning during the as you're working for Craig, then it's going to track all of those skills. And so you can see here we have Brittany. I don't know. I'm just going to keep Brittany up. I think Brittany was #1 last week. And just to save time, I'm not going to go back to well, yes, I will. Okay. So we decided that, we were tracking all this great stuff. So we decided that we wanted to show you off to the world. And so, all right, Barry, I didn't want Barry I should have acknowledged Barry's hard work. Barry is #1 today in our talent finder. So people can, if they are they're looking for bookkeepers, they can find you. In the gym, you have a little thing that says open to work. And if you have that turned on, then you show up in this talent finder. And then anybody can just click on your profile and see all of the hard work that you've done, all of the skills that you verified. We have these different skill groups. So you can click on a skill group, and you on yourself or anybody else can see, oh, what specifically did Barry do in the realm of troubleshooting. And then you can see how you compare to everyone else in the group. And then what we do is we track 3 specific metrics. Okay, so one of the metrics is your knowledge. The knowledge is the total number of skills that you have verified, that you have practiced in the QBO gym. That's your knowledge metric. But we didn't want to. We didn't want to. We didn't want to. I can't talk all of a sudden. I'm so excited about the exercise coming up that like the intro, I'm getting lost in the intro. Okay. So, so we didn't want to, what's the word I want to say? To look down on the people who are brand new. Okay. So if you're brand new in the gym, obviously you're not going to have time to build up all of the knowledge. So we have this other metric, which is speed, and this balances your knowledge. This balances your knowledge out. So the speed is not how quickly you go in and go through the exercises, but it is how many skills you are able to accumulate in a week's period. Okay, so Barry, somebody else might have more knowledge points, but he was like kicking butt, and look at how many he did. He did 39. It doesn't mean 39 exercises. It means he practiced and verified 39 skills in the last week. The third metric is the consistency, and this is actually the most important one. If your consistency isn't high, you're going to be poof, down at the bottom. Your consistency, the reason we put this in is because we designed this with the help of a recruiter. And the recruiter said that her biggest frustration was reaching out to people who were no longer available, that weren't looking for a job, either because they already got one or because they decided not to or whatever. And she actually wanted us to have you guys just like check a box every week. Yep, I'm still looking. Yes, I'm still looking. Yes, I'm still looking. And we thought that was a little excessive. So we said, well, we're going to make them do it every 2 weeks, not every week. And instead of just checking a box, why not just have them do an exercise? So that's why we have an exercise of the week. So the exercise of the week is actually a separate course. So those of you who are in the gym, if you are subscribed to the gym, the exercise of the week is a separate course in your dashboard. And it's unlocked when you have achieved 250 points in the gym. So the entire gym is gamified. So every time you do something, there's bells and whistles and clicks and woohoo. And as I mentioned last night, we had one student who said that it kind of feels like winning at a casino. So you're raking up all these points. It's super fun. Somebody said, Greg said, I've been in the gym for about 2 weeks and I love it. It's awesome. And I can't wait to make it on that list too. Woohoo! I will look forward to seeing your name. All righty. So, oh, we've got Joel. All righty. So he's got the main page thingy. Okay. All righty. Excellent. So anyway, you can click on this little drawer down at the bottom that tells you how many points you have racked up. And when you get to 250, that's when the gym is unlocked. And if it's not unlocked for you, or you don't have a subscription for the gym, don't worry about it, because Joel is going to post the link in the chat as soon as we get there. Which I think is now. I think we're ready to, isn't that like my whole speech? Did I forget anything? All right, I think we're good to go. All right, so let's dive in. So excited. All right. What does it say, Sandy? I like having an action that keeps in the gym. Before the gym, I could go a week with only being in the gym a few hours a week. All right, excellent. All right, so let's talk about, okay, I'm going to take the screen share off for a second because we need to talk eye to eye. All right, okay, let's talk about today's exercise. Okay, so there's a lot of factors. Okay, so one is that this year we are every month, at least we're trying to, knock on wood. We weren't able to accomplish it in January. We did it in February. Anyway, today, so today is a niche training. So once a month, we are trying to focus on niche training. Okay, so learning something about a specific area. Last month, we did Shopify. So if you missed that, go back and, well, I guess it's not available on YouTube. You don't get the link to the exercise. But if you're in the gym, and you have the exercise of the week unlocked, go back to like whatever it was, probably February 21st. And we talked about Shopify. And then last week, I kind of teased that maybe we are thinking about possibly maybe doing some stuff with restaurants. And so today I wanted to focus on some restaurant bookkeeping. But as I looked into it, I realized that there was just like this tiny piece that I wanted to cover. So today we're not really talking about, not talking about restaurants specifically. We're just talking about times when you make a sale outside of QBO and you have to get the information from that sale into QBO. Okay, so most of the time when we talk about QBO, we talk about like sending invoices from QBO, and then they pay them, and then we do our expenses and bills and all of that stuff. But if you have some kind of system outside of QBO, now a lot of the systems today, a lot of them have an integration. Okay, so you can plug it in via an app or some kind of thing. But depending on the volume, you might not need a complicated interaction. You can just enter a daily sales summary. Okay, you see the system outside of QBO, which is called a POS or point of sale system, is so the POS system, like that's going to track all of the individual sales. And so you really don't need every individual sale. You just need like the lump sum in QBO, and you just need the oh, thanks, Lindsay. Lindsay put in the link to the YouTube video about Shopify. You don't get the exercise, but at least you can walk it through. Anyway, so you can just you can print out a report it doesn't matter what POS system you're using, okay? Whatever POS system has a report that you can print out, because sometimes in restaurants or whatever, it's called a Z out report or a Z tape, where it's just like a summary of the daily sales, okay? So then you're going to take that summary, and you're just going to put the summary into QuickBooks Online. Now, this used to be taught, or understanding how to do this used to be on the level 2, or what used to be called Advanced Pro Advisor Test. And I don't think that it's on there this year. I glanced this week. I glanced at it. I was like, is this still tested? I glanced at it. Maybe I missed it. Maybe it is there. I don't know. But I think that it's no longer there. It used to be that I would teach this every year in the advanced, or what's now called level 2 course. And I would teach it because you had to know it by Intuit, but I never really understood it. I never really understood why we had to do it this way. And so when I was planning for today, I thought, okay, I'm going to teach this. Maybe I should try and figure out why is this? This is always my big thing is why is this? Why do we have to do it this way? And I figured it out. Okay. All right. So we're just going to, we're going to start with the exercise. But before we get into the exercise, I need to show, before we get into the actual exercise, I need to show you some things of how QBO works so that when we get to the actual doing of the exercise, it's going to make sense. Okay. All right. Oh my gosh, guys, I love this. I love this. Okay. All right. So let's go to the exercise. Joel has already put it in. Oops. Did my assistant forget to put it? Hopefully. Oh, I may have to stop my screen share again. This is beautiful. What is this blank screen happening here? All right, here we go. He did. Okay. Click here to learn about recording daily sales. That's what we're going to do. Okay, so recording a daily sales summary. Here is our scenario. Craig has decided to set up a lemonade stand at his job site. Did you guys see the what I posted in the locker room? Um, that the lemonade stand. Okay, now you get it. Okay. So Craig decided to set up a lemonade stand at his job site. He collected cash and accepted payments via both Venmo and Zelle. Let's see how you would record this for him. Okay, so I want you to imagine he's got a little lemonade stand. Okay, we're not tracking the expenses for the lemonade stand. That's a totally different lesson. Okay. We're just going to say he magically had lemonade there to sell. Okay. So he's selling lemonade and he's collecting while while he's selling lemonade, like he's collecting his payments, and he has some kind of external system where he's keeping track of this. Maybe he's got a computer there with a screenshot, or with screenshot. Where did that come from? With a like a spreadsheet. Maybe he just wrote it down on a piece of paper. Maybe he didn't keep track of anything and he's just got his cash at the end and his phone that has like the Venmo and Zelle payments. Okay. But here we're going to talk about how to do this. All right. So we're going to start in the sample company. And Joel has already put this in the chat, but we have, if you don't want to go through your own QBOA account, we created this little quick link that's acadian.com/QBOA. And that will load the sample company directly for you. For those of you who are new, this is how we practice. We practice in the sample company. All right. Oh, I forgot to mention that if you have the gym, okay, if you have the gym and the exercise of the week is unlocked, make sure that you use the link in the exercise of the week. Okay. Don't use the link that Joel and Lindsay have been posting in the chat. Okay. The one that's in the chat is for people who are outside. People, that's the free version. Okay. It's not the version, you will not get credit for it in Booksmatch unless you use the one in the course. Okay. All right. So here we are here I am in the sample company. And then, so the first thing that we're going to do is we're going to record a sales receipt. Okay. So Craig has already collected the money. Okay. Remember that the difference between a sales receipt and an invoice is sales receipt, you collect the money at the time of the sale. An invoice, you collect the money later. Okay. So Craig has already collected the money. He's not sending people invoices for lemonade, right? So we're going to use a sales receipt to record this. Okay. So we're going to, all right. So here are our instructions. Okay. It says click plus new. We're going to do that in a second. Notice that I have this little button that says guide me. Now, we create our exercises in a platform called Scribe. And Scribe provides a free Google Chrome extension that you can download. So if you're using Google Chrome, you go to the Chrome Web Store and you download this free extension, or you plug in this free extension. It looks like this. It's called Scribe AI Documentation. Okay. And when that is installed, then when you're doing the exercises, that's why when you see this little button that says guide me. Okay. If I click guide me and I have the exercise and I have that sample company open, I'm going to click confirm. Boom, magic happens. And you have the exercise on one side and the sample company on the other. Now, if you need help loading that extension, if what I just said went a little too fast for you, Joel earlier, maybe you could do it again, posted the instructions on how to install that. Okay, what I just said. All right. Okay, so here we go. Okay. All right, so Craig received the money, so we're going to click plus new and click sales receipt. Okay, so as I mentioned, we're not recording every single customer. Like that's normally what you would do with in QBO, right? So you have a customer, you sold this thing, you have another customer. We didn't keep track of all of the people that came and bought lemonade. Okay, so we're just going to have one customer. It's going to be, they're all going to be, the sales are going to be smushed together. And that's okay because we don't need to know all of those customers. And if this were, say, a restaurant or a food truck or something that has some kind of like other POS, system, then they have that information. We don't need that in QBO. We just need the totals. All right, so what we're going to do is we're going to create a new customer. I'm going to click add new, and I'm just going to call this lemonade customers. Lemonade customers. And then, so here I am, step 5, and then click save. Oh, I forgot to tell you guys. If if you follow me on Instagram, and you all should, Joel will put my Instagram thing on there in the chat. Instagram is where you get all of the behind the scenes stuff, like what Margie's life is actually like. Then that's where you find it. I post 3 times a day about like what is happening. I posted just right before here. And I said this morning how I was working on the exercise for the exercise of the week and I didn't get it finished. And I was hoping I would get it finished before the live stream. Well, I did not get it finished. So we'll get to a point in the exercise where it's not quite, I have to finish cleaning it up. Okay, but that's okay because you're here with me and you have the link. So it'll auto update as soon as I clean it up. We'll get to that point. It's not for a while, but we'll get to that point. All right. So here I am. I created what happened to my customer? Didn't I create the new customer? There it is. Okay. So I've created the new customer. Now, we are not going to go to the next step because I'm actually going to close this. Okay. And now, okay, just watch, just follow me. This is not the exercise. This is the pre-exercise. This is the Margie deep dive to help you understand why we are doing what we're doing. Okay. This is the exciting part. Okay. All right. So when you create a sales receipt, okay, you have a field here called deposit to. Okay. Deposit to, do I have my chat open? Okay, good. Just want to make sure everyone's following. Okay. All right. You have a deposit to. And this is where you are putting the money. Now, in the case of cash or checks, but nobody paid a check for a lemonade. If you, in the case of cash or checks, you don't put it in the bank immediately, right? You have cash, and that's going to go in some kind of an envelope or a drawer or something. And that in QBO is called undeposited funds. In some accounts, it's called payments to deposit. Okay, it's just like this, it's a whole temporary holding place. So if it's cash, then it's going to go there. So let's say that that he sold we're going to say that Craig sold $200 worth of lemonade, and everyone paid in cash, and so it just went there. So we can say the payment method was cash. It went to undeposited funds. And then what did he sell? Well, we are going to have to create a new product or service because, and this is in the exercise, but we're going to do it together right now because, all right. So we're going to create a new product and service because we've got to sell that lemonade. So what's he selling? He's selling a non-inventory product. What's it called? It's called lemonade. Okay. And I can't remember if I have this on the exercise or not, a description, lemonade sales. I don't remember what I said. Lemonade sales. Okay. Now, what income account do we want to track this? Okay. Well, this could be sales of product income, because it's a product, right? But maybe like lemonade is very different from the other types of things that Craig sells. If you guys are new, then you might not know that Craig is a landscaper. Okay. So the stuff that he sells is like, he sells rock fountains and he sells garden lighting and he sells, soil and sod and that kind of stuff, right? So lemonade is very different. Because lemonade is very different, we probably want to create our own account to track that. Okay. This is going to vary. It depends on the business, whatever. So we're just going to create a new account and we're going to call it lemonade sales. And we're going to call it, it's an income account. And it is sales of product income. That's the detail type. That's not the account. Okay. So now it says lemonade sales. Okay. And I'm going to save that. And I'm going to exit out or save and close here. Oh, I forgot to do sales tax. Sorry. All right. In the exercise, there's a whole thing about sales tax. We're going to make it non-taxable just for the purposes of this exercise, so we can demonstrate what I'm talking about without the extra layers. Okay. So we're going to say that we sold $200 worth of lemonade. Okay. And everyone paid cash. This is exactly how you would record it. Here is the lemonade sales. All right. Now, we are going to save this. Don't save and close. We're going to save it so that we can look at the transaction journal. Okay? Because here we go, debits and credits. Okay? We have to talk about the debits and the credits. Okay. Yes, COGS is expenses, but it doesn't incur until you actually sell the item. That's why the question. Okay. So, all right. So we have to talk about debits and credits because we're going to do, this is super important to understand. And maybe this is why I never understood it before, is because I never really understood debits and credits. So we're going to go through the debits and credits lesson, okay? And talk about debits and credits, okay? So we are, I have to put this over here. Okay. You guys can still see that, right? Oh, maximize. All right, there we go. Okay. All right, so so we're this is double entry accounting, which is what everyone does, GAAP approved, all that good stuff, okay? In double entry accounting, whenever you record something, you must record an equal amount on the other side, okay? So the entries must balance. There's always going to be a debit and a credit that matches, that the totals match, okay? So you can think of it like a seesaw, where you have on one side you have debits and on the other side you have credits. So if you put something on the debit side, then in order to balance it out, you have to put something on the credit side, okay? So in order to understand how, like where to put the numbers, you have to first understand what's called the natural balance. Each type of account lives on one side or the other, okay? And like I said, that's referred to as the natural balance. It's where they start. This is like where they live. I think Uyi calls it like your house. This is their house. They live on one side or the other. You have to memorize where they start. There's just no way around it. You have to memorize it. Just like you had to memorize the alphabet. And then once you memorized it, you knew it, okay? And if you're a musician, like you have to memorize key signatures. You just have to. Like there's just no bones about it. You memorize it and then you know it forever, okay? So you have to memorize it. But I'm going to help you memorize it. All right, so the natural balance, okay, is divided into where the money came from is on the right-hand side, where the money went is on the left-hand side. So the types of accounts that are where money came from, those are credits. Where the money went, okay, or the destination, where did it go? Those are debits, okay? So what types of accounts are on each of those, okay? Oh, I forgot to take this out. I don't know why it always doubles. Okay, so one type of account, so where does money come from? Well, it comes from customers. It comes from customers. That's an income, and it's also referred to as revenue, okay? So revenue is on the right-hand side, okay? Another place that money comes from is the owners, right? The owners invest their money and they say, okay, here's my money, little business. I hope you flourish and grow. Okay. So it comes from the owners. When it comes from the owners, it's called equity. And equity is also on the right-hand side. The third place that money comes from is from things you have to pay back, right? So liability accounts are like loans or a credit card, something that you have to pay money back to, okay? So that is called a liability account. Those are the places that money comes from. Those are the ones that are on the right-hand side. So where does the money go? What's the destination of the money? Well, there's three things. The first one is assets. The assets are the things that you own. Sometimes they are like cash in the bank, okay? And sometimes they are like fixed things that you have to sell in order to get to it, but it's the stuff that you own that is one of the places, okay? So that lives on the left-hand side. Another place money goes is expenses. So the money goes goes out to vendors and things that you have to buy in order to run the business, okay? And then the third place that money goes is back to the owners, okay? So everybody that owns a business hopefully is making money enough so that they can get paid back out of it. That's called a distribution or a dividend. And so that's also on the left-hand side. So you can see that this spells out the word dealer, and that's how you can remember where the money is, okay? Or where the money starts, okay? So that's super important to remember where the money starts. Now that you understand where the money starts, now we have to talk about how the money moves, okay? So when there's a transaction, okay, when there's a transaction like this sales receipt, okay, money is moving. And how do we know how to record that, okay? Well, let's put this one up. Oh, I forgot I can just maximize it. Okay. All right. So here we have on our left-hand side, we have debits. On our right-hand side, we have credits. Okay. When we say that something is debited, when you hear the word, up until now, I've been using the word debit and credit as a noun. Okay. So these are the debits. These are the credits. Okay. But when you use it as a verb, so you say something is debited or something is credited, debited always means that it's on the left. Okay. It's moving to the left. And if you say it's credited, then that means it always is moving to the right. Okay, so it's moving to the right. The hard part is when people use the term increase or decrease. If you say this account increases or decreases, then you're like, what? What just happened? Like what? Okay. So here is how you can remember. Yes. So Yomara's asking about the replay. She just saw the email. As I said in the email, will be on YouTube. This will also be in the locker room shortly after this, and it will be on YouTube in a couple of days. Okay. All right. So here we are, the debits and credits. You have to remember which is when you say increase and decrease, that's when people lose it. Okay. And so here is how you can remember. Here's how you remember. Okay. We're going to take you back to when you were in middle school and you learned how to chart numbers on a graph. Okay. So when you did that, you guys all remember this. Okay. You had a line that went up and down, and you had a line that went straight across, and you had 0 in the middle. Okay. You all remember this. Now, on the right-hand side of that 0 went all the positive numbers. Okay. It went 1, 2, 3, 4, 5. Okay. On the right-hand side. When a number increased, it went further to the right. When it decreased, it went further to the left. Okay. Easy peasy, right? You got it. Now, where it gets challenging is, why did it do that? I don't know. Where it gets challenging is when you're on the left-hand side, okay? When you are graphing numbers, negative numbers were on the left-hand side, and it got more negative on the left, okay? Now, I want to make it clear that debits are not negative numbers, okay? It's just it just operates in the same way as these numbers do. Okay, so I don't want anybody thinking, oh, this number should be negative. No. Okay, so we've got on the left-hand side. So when you have more negative, okay, when you have more negative, which direction is it moving? It's moving to the left. And when you have less negative, when there's less money in that account, okay, it's moving to the right. Okay. All right. So now that we understand debits and credits, let's take a look at our sales receipt. Okay. Okay. This is so good, guys. Okay. All right. Okay. All right, here we go. So now We have saved this sales receipt, okay? Now we're going to take a look at the debits and credits, the transaction journal that's underneath this sales receipt, and what are we going to expect, okay? We have money that, where did the money come from? It came from the customers and it went into an income account. Okay, income account on the right-hand side. So we should expect to see $200 on the right-hand side. Yep. And then we should expect, so then the money, what was the destination? Where did it go? It went into undeposited funds. So that is an asset account that lives on the left-hand side. So we should see $200 debited and $200 credited. Okay, you guys with me so far? Usually I stop and quiz you, but we've got a lot to cover still, and we're already an hour in. Okay, so let's take a look at it. Transaction journal. This is so important in order for you to understand the next piece of this. And then we'll get back to the actual exercise. And then the actual exercise will make so much sense. Okay. So here we have undeposited funds. That's our asset. It lives on the left side. It increases to the left. That's why we have it here as a debit. We have our lemonade sales. That's our income account. It's credited. Okay, it lives on the right. It increased. It's on the right. That's why we see that. This Board of Equalization, that's the sales tax that I turned off because I don't want to make it more complicated. Okay. All right. Now, let's go back to this sales receipt. And actually, let's go back to the exercise and read again what the situation is here. The situation is Craig has decided to set up a lemonade stand at his job site. He collected cash and accepted payments via both Venmo and Zelle. So here's the issue. We're going to go back to the sales receipt. There is only one deposit to. There's only one thing. Okay. So if we have to spread out that money, that $200 to more than just undeposited funds, we're going to have to do something a little different. So here's what we're going to do. We are going to, and I actually don't have, let's see, I don't know if I can just delete it. Yeah, I can. Okay. We don't need the payment method. We could create a payment method just called daily sales, but in the exercise, I just left it blank. Okay. The deposit to, actually, let me pull my exercise back up so we're side by side so I don't have to keep flipping because we're back in the exercise now, but I need you guys to understand this. Okay. So we created, okay, so here's where we are, create a clearing account. Now, if you don't know what a clearing account is, we talked about it a couple of weeks ago. We went on a big thing about clearing accounts. Clearing accounts have a natural balance of 0. They are temporary holding places where you put money in and then you put money, you take money out with the goal of it just always being at 0. Undeposited funds is a form of clearing account because you put the cash in there temporarily, and then when you take it to the bank, you take it out. Okay. So where is here we go, my sales receipt right here. Okay. So I can't use this. So I'm going to create a clearing account. I could actually, because it's going to be 0, I could actually use any account, but that's what the point of clearing accounts is, to be a 0 balance account. Okay. So I'm going to create a new account, and that's what this is right here on the steps. The account name is going to be daily sales. And the account type, it's not actually a bank account, but we treat it like a bank account. That's why we set it up that way. And then I'm going to hit save. Okay. All right, so now we're going to go to daily sales, and I'm veering off of the exercise right now, because in the exercise you're doing it all in the correct order with not this deep dive explanation that I'm going through right now. Okay. So what I can do is I can create a product that links to the undeposited funds and make it a negative number. So if your head just exploded, don't worry, just follow along and you'll see why that is. Okay, so we're going to add new. It could be a non-inventory or a service. Most of the time people use service ones. So we are creating, so this is all creating the product. No, where are we? Let's see, we need to create the cash product, which is in the exercise. I know this is, okay, here we go. Create the payment methods. Here we go. Oh, see this new picture? I told you it wasn't fully edited yet. Oh, phew, I am sharing my screen. Okay, good. All right. Okay, so what we're going to do is under name, here we are, is we're going to call it cash. And we're going to put a little negative, in parentheses. In the Shopify lesson, you saw a similar technique to kind of help you remember what you're doing here. Okay. This is going to help us remember that this needs to be a negative number. Okay. All right. So to keep the different payment methods together in the products and services list, we're going to create a new category and we're going to call it payment. And you'll see why that looks good when we do it in just a second. So I'm going to hit save. Okay, so that was step 27. Click the description on sales form field. Okay, under description, we're going to type cash received. Okay, now remember that when you receive cash, it needs to go into the undeposited funds account first. Okay, so under the income account, and last week we talked all about the product and services and how they're linked to the income account and how the income account shows up on the profit and loss. Remember that? So here we have our income account, and we're actually going to select undeposited funds. Okay. And then I'm going to hit save and close. The exercise says to do save and new, but that's okay because this is the deep dive. Okay. Oh, and I forgot to do tax again. Okay. So now I'm going to put in this product and service, we're going to put this as a negative number. Watch this, minus 200. Okay. So now the total is actually 0. And I'm going to save it and watch what happens to the transaction journal. Okay. Linda says, why would you complicate by doing this? You will see in just a moment. Okay. All right. So I'm going to click the transaction journal. Okay. And look what happens. I'm going to close this. Okay. Look, the exact same thing. It debited undeposited funds and it credited the lemonade sales. Even though we put a negative number, remember how we put a negative number on there? We did the negative number, and all that did was make that this 0, but it accomplished the same thing. Let me look at it again, the transaction journal. Dum, bum, bum. Okay, so it accomplished the same thing, but now we also have this account right here, this daily sales account that is just zero. Okay, but here's the important part. So Linda said, why would you do this? Why would you complicate this? The first thing just accomplished it. Here's why. Because he didn't just collect cash. He collected cash and accepted payments from both Venmo and Zelle. And both of those are treated differently. So here's where we're going to get back to the exercise. Okay. I'm going to go back to the number. Okay. And we're going to go back to, so I think I said only $100 actually came from cash, only $100. So we're going to say negative 100. Okay. And now we have to create our other payment methods. We have to create Venmo and Zelle. So let's do Zelle first. I think that's what I did in the exercise. Bum, bum, bum. Let me find it. Okay, payment methods. So we did cash received, it went to undeposited funds. Okay, so here we are, right before step 32. We're going to create the Zelle payment. Now, Zelle payments go directly to the bank account. In case you've never experienced Zelle before, that's kind of the beautiful thing about Zelle is that it goes straight into the bank account. Whereas things like PayPal, Venmo, Cash App, they all go to like their little holding spot first, and then they go, there's like an extra step. But Zelle goes straight to the checking account. So when we create this one with Zelle, we're going to do the same thing, Zelle, and we're going to put a negative. And then because it's going straight into the checking account, where the income account is going to be checking. And now we're going to hit, oh, and I'm going to make this payment thing. And I'm also going to make this non-taxable because it's a lemonade stand. Okay, and even though it still says here that's a standard rate, you'll see that it for some reason it does that, and it'll show up correctly when we actually do it. Okay, and now we're going to create the Venmo account. All right, so we're going to go to save and new. And for some reason, it keeps all this information. Okay, so now we're going to change this to Venmo. Okay, still the same category. I should have put a description on these. I didn't. And now the income account. Let's talk about the income account for Venmo. What did I just say Venmo does? So Venmo, Cash App, they don't go directly to your bank account. They go to their own like holding account, which is what? It's a clearing account. So we have to create a clearing account for Venmo. Unlike PayPal, Venmo, doesn't take out, well, if you have a business account on Venmo, it takes out, I think it takes out fees. But if you just have a regular personal account, which if you have a lemonade stand, you're probably going to use a personal account. All right, so so we have Venmo, but now the income account has to be this new, it has to be this new Venmo clearing account. We're on the exercise, we're step 35. Okay, Venmo clearing, bank, detail type. Again, clearing accounts are not bank accounts, but we kind of treat them that way. That's why we're doing that. Okay, so now I'm going to hit save. That was saving the account. Now we're going to save the product. So I'm going to hit save and close. Okay, so now the exercise needs to be edited. So I'm just going to walk you through it. Like I said, I will finish editing the exercise. It's the same link. It'll later today, it'll be updated. Okay, sorry about that. Okay, so Venmo, it was $50. Venmo, oops, I gotta go. Not $50, 75. Negative 75, okay? And Zelle, we're gonna say negative 25. Now, an important point about Venmo, I'm sorry, not Venmo, Zelle. An important point about Zelle. Because it goes directly into the bank, there's going to be a separate Zelle. There's going to be a Zelle transaction, Zelle transaction, Zelle transaction, Zelle transaction. Okay. So in real life, you would actually have to separate out on the sales receipt here each of those transactions because that's what you're going to match in the bank feed. And when you do your bank statement or when you do your reconciliation, you're going to match each one of those individually. For time's sake, I didn't do that here, but you need to understand that you always have to be thinking of how is this affecting the bank, okay? For those of you who are in bookkeeping fast track, which, by the way, if you didn't get the announcement, if you didn't hear, I mentioned that we're having problems with email, right? So the bookkeeping accelerator is now called bookkeeping fast track. And this is the foundation course that teaches like what I just showed you about debits and credits. Like this comes from that. And I forgot why I was mentioning that. We talk about clearing accounts. I can't remember why I just I forgot why I was saying that. All right, if somebody knows why I started talking about the fast track, let me know because I've totally forgotten. Okay, so here we are with our I know why. Because I was talking about the bank. Like that's one of the things we hammer in the fast track course is how we actually start with the bank. We start with the bank transactions and then build the course from there because everything you do, you have to make sure that it matches what's actually happening at the bank. Okay. So yeah, so I was thinking and yeah, ooh, thank you. Okay. All right. So in a real world, you would split out all the Zelles because they're individual. In Venmo, they're going to go into that Venmo clearing account, and in the cash is going to go to that undeposited funds. Okay. All right. So let me click save. And let's take a look at the transaction journal. Let's see where all of this stuff is actually headed. Okay. So I'm going to look at the transaction journal. Okay. So this sales receipt it was zero. The sales receipt itself resulted in zero, but the amounts are still showing up correctly in all of the different places. So the income that we received from the lemonade sales, $200, perfect. It's a credit, right? Because income, revenue lives on the right hand side. It increases on the right. Okay. And now we have, look, the cash went to undeposited funds, exactly where it's supposed to go. So now there's $100 in cash sitting in undeposited funds waiting for us to deposit it. $75 went to the Venmo clearing account. Okay, that's also an asset. So it lives on the left-hand side. When it's added to, there's money there. Okay, that's waiting for us to transfer. Venmo requires an extra step. Venmo requires us to actually transfer that money into the checking account. Same with Cash App. Okay, and then we had the Zelle stuff. I should have put the description so we could see it better. I'll add that when I redo the exercise. The Zelle money went directly into the checking account. Okay, so this is exactly this is why, and this is the thing that I never could understand when I had to teach this as part of the test. I never understood why it had to be a $0 sales receipt and why all of the payments were negative. I never understood that. Now I get it. Okay. All right. So Maria is asking, would you record the transaction fees in the sales receipt as well, or would that be a different entry? That would be a different entry. Okay. All right. And that was part of the clearing account conversation we had a couple of weeks ago, where we talked about how money, like with PayPal, I think was it PayPal that we did? Maybe it was Stripe. I don't know. The money comes into this holding account. The fees come out of that account, and then the balance, which is less that, is a transfer into the account. Stripe. Thank you, Arlene. So we talked about Stripe the other day, or a couple weeks ago. Okay, so now we have to think through like what has to happen next. Okay, well, first, Craig has all this cash he's got to deposit into the bank. So how are we going to do that? Well, we're going to go to Plus New. We're going to go to Bank Deposit. This, by the way, everything I'm doing right now is in the exercise. I just haven't written the descriptions that go with it. Okay, so this is all there. Okay, so I go and look, here's those lemonade cans. There's those lemonade customers. Okay, the cash received, the $100. Okay, so we're going to select all of this and we're going to go ahead and deposit it in the bank. Boom. I just deposited it in the checking account. The next thing I have to do is I have to transfer that money from Venmo to the checking account. Okay, so let's do that. How do we do that? With a transfer. Plus New, then transfer. Okay, money is coming from the Venmo clearing. Currently it's got $75. It's going to the checking account. How much? That whole $75 is going there. Okay, and then I'm going to hit save and close. Okay, so now let's see what this looks like on our reports. I'm going to go to my balance sheet. So we got $200 from our customers at the lemonade stand, right? $200. So we should see $200 no, that's going to be on the income statement. Sorry. So we should see the $100 of cash that went into the checking account. We should see the $75. No, how much did I transfer? Yeah, $75 transferred from Venmo onto the checking account. And I should see the $25 Zelle that went directly into the account, right? We should see all that. So checking. Okay, scroll down to the bottom. And here we see exactly those things. This is the $25 Venmo that went directly there. This is the deposit we just made that included those 2 checks that were also in undeposited funds. This was the transfer from Venmo. And if I go back to the balance sheet, you can see I have a daily sales account here as 0, and then the Venmo clearing. Now the daily sales, it was only ever $0. But the clearing account should have money that came in and then money that came out. Okay, so let's go on $0. And here we see money that came in and money that came out. Okay, now there is one more thing that we have to do. I'm going to go back to the balance sheet. Oh, and we'll just see, we can just look at the profit and loss real quick and see, we can see our lemonade sales right here, $200. Okay. All right. There's one more thing that we have to do. I'm going to see if anybody can guess what it is that we have to do. We probably would not do this on a daily basis, but let's say he does this and it's going really well. And so every day we do that sales receipt, and you would probably have a memorized transaction, or what in QBO is called a recurring transaction. So you would probably set up a recurring transaction, and the recurring transaction would show up every day, and you would just plug in the numbers. So fast, guys. It's so fast to do this. But then probably once a month or so, there's something else that you need to do. Patina for the win. You have to reconcile. You always have to reconcile your clearing accounts. Yes. All right. So how do we reconcile those accounts? They're not bank accounts. Well, they kind of are. Remember how when we set up those clearing accounts, we said they were bank accounts? So we can reconcile them the same way. So I'm gonna get started. Okay. So reconciling a checking account, far more complicated. Okay. Daily sales. This is just always going to be zero. You probably don't have to. I mean, because money didn't come in and money didn't come out. So you probably don't have to actually reconcile this unless, money did go out. You might want to check, but it's nothing. It stays nothing. And oops, I forgot. I didn't actually check it. I thought I did. Let me do it again. Oh, here it is. Check that box. It doesn't make a difference, okay? But the one that does make a difference is that Venmo clearing account. Guys, you have to reconcile your payment methods. If it is PayPal, then you have to get a PayPal statement and reconcile. If it is Stripe, you have to get a Stripe statement, okay? With Venmo, you're not going to have a statement, but you should know that it is zero. So I'm going to go to my Venmo clearing account. Statement, remember, always should be zero. The statement ending balance should be zero. That's the natural balance. Money went in, money came out, okay? So 0, statement ending date, and then start reconciling. And here we have the deposit, the money that went into that deposit. We've got our fund 0, and we finish now. Okay. All right. All right. So that is it. Questions. Let's see. Stop share. Okay. So Linda's asking, could you have done this in 3 sales receipts, 1 for cash, 1 for Venmo, and 1 for Zelle? Then you don't have to do the negatives. Then the clearing account of daily sales isn't necessary. Yes, you absolutely could do that. However, that is 3 times the work. So why would you do that? Also, the one I did was very, very simple. So it wasn't hugely complicated. But when you get into this whole started because I was going to do a more comprehensive lesson on restaurant bookkeeping. And when you get to restaurant bookkeeping, there's way more things that come out of that money. Okay. So you've got all the money coming in, you've got cash. Sometimes people pay with gift cards. You've got the different credit cards, right? Maybe you have checks, you've got all that. And then you have not just lemonade sales, but you have other things you maybe want to track, food separate from beverage, separate from alcohol, for example. And then you have other things like tips. So the beauty of the daily sales summary is that whatever system you're using will just print out a report, and you can create one sales summary and you can memorize it. You can have it be set up as a recurring transaction. That's outside of the scope of this lesson, but you could set it up as a recurring transaction, And then just every day you just go in and plug the numbers. Like it makes it very, very simple. Okay. Huh. So Micah is asking about using PayPal and multiple currencies. That is a giant lesson. Multi-currency is its own lesson and far outside of the scope. But I see that Uyi has a lot of experience with this actually. So, because she is in Canada. All right. So yeah. Will the restaurant lesson be coming soon? We'll see. We'll see. All right. Let's see. What do you do with difference between the sales amount taken out by the Cash App, Venmo, PayPal? So Cash App and Venmo, well, I don't know. For Cash App and Venmo, they don't have, well, I guess PayPal doesn't either if you set it up as a personal account. So this was just a very simple lemonade stand, and he probably just had the full balance. If you have to take fees out, then there's an extra step. You have to create an expense that takes the fee out of one of those accounts so that when you do the transfer, it's minus those fees. I did talk about that in a lesson a couple of weeks ago. All right. Could you have deposited this into the savings account? Yes. Uyi says it's applicable to e-commerce. Yep. Journal entry. Yes, yes. So some people do this with a journal entry instead of a sales summary. And in fact, in the gym, we have an exercise that shows you both sides, shows you how to do it via so in the gym, I mentioned that all sorts of things happen to Craig throughout the year. Okay. And this would be a good time, Joel, to put that gym link again if you want to try it out. But so all sorts of things happen to him. And one of the months he decides to sell stuff at a farmer's market. And so it's kind of similar to the lemonade stand. And you actually practice both ways, both doing it as a sales summary and then also doing it as a journal entry. And you can see the differences, how you do it, as well as why you would want to do one or the other. All right, let's see. All right, Joel or Lindsay Key, if you could post the link to the gym, that would be great again. All right, so let's get back to, because there's one more thing I need to cover. All right, so the exercise is finished, but with the gym and on these calls, we always include a marketing prompt. All right, where is it? The reason I created these QBO quick tips is that I had so many people. Now we at Acadian, we are not a marketing company. However, we recognize that most of our students want to be freelance bookkeepers and want to learn how to market their services. And I just kept hearing, oh, I know I'm supposed to post on social media, but I don't know what to say. And it was driving me nuts because I was like, how do you not know what to say? You're constantly learning something new in QuickBooks Online. And so I decided to write marketing prompts for throughout the gym. So when you're in the gym, as you're working through the year with Craig, you earn marketing prompts. Okay. So you learn a thing and then you learn then we give you ways to talk about it in social media. We call them QBO quick tips. Okay. And so with the gym, you have to actually earn the marketing prompts, but with exercise a week, we have one marketing prompt for every exercise. Okay. And so you just get it. And by being here, you get it. Joel has already put it in the chat. Now, we've been talking for the last month or so about using ChatGPT to generate QBO quick tips. Okay. And I had tried a couple of I don't know, a month or so ago, I was like tired. I'm like, I wonder what ChatGPT would write. And it took a couple of iterations before ChatGPT got it, got a good one. But now it's learned. Now it's learned what I look for in a QBO quick tip. So I actually create the exercise. I go to ChatGPT and I say, okay, here it is. And I have actually saved, so you can see my conversation with ChatGPT and you can use it now that it knows. It can create QBO quick tips for you too. And Joel has put that in the chat. You'll notice if you use that link in ChatGPT, you'll notice that I did not use precisely what ChatGPT wrote. I didn't want to take the time to explain to ChatGPT why I didn't like it and what I wanted changed about it, which you'll see that in earlier conversations with ChatGPT. You'll see me talking to it to say, well, that's not quite right, and here's why, and and all of that. I didn't do that this time. It gave me the one, and then I just wrote it a little bit differently to give it to you here today. So this is what it says. Our QBO quick tip: if you are capturing sales using a POS system, you don't need every single customer listed in QBO, but you do need the numbers. Recording a daily sales summary keeps your books clean and saves serious time while still capturing everything you need for accurate reports. Want to streamline the process? Just say the word. Okay. Now, Joel has also put in the chat a video that I recorded a while back that teaches you how to use the 3-2-1 in your marketing. So you can use that. We have called the 3-2-1 method, and that is actually part of the training that we provide in a separate course called the Getting Clients cohort. Okay. If you are serious and ready to actually start talking to people about doing bookkeeping for them, then I highly recommend that you not only join this cohort, but actually do the things to put yourself out there. So we're going to teach you exactly the methodology. We teach the 3-2-1 method. We teach you the technical stuff. So how to set up your LinkedIn, how to use Canva to create really pretty. Lindsay is amazing. She teaches like how to use Canva to make these to help you create a logo for yourself, as well as to create these branded QBO quick tips that you can then use to tell people about your business. Now, I want to be really, really clear that the QBO quick tips are not ads. Like, don't think of them as ads. You cannot expect, it's not like you're running an ad and you're expecting people to respond to that ad. It's just an opportunity for you to add value to the community. I actually just recorded a few days ago another video about marketing that I like. The team just got it back to me yesterday, and I was like, oh, every one of my students, as soon as that gets finished, the editing gets finished, I'm like, every student is going to get that video because it's so good. It's so good, if I do say so myself. But anyway, um, anyway, I forgot what I was saying because I got distracted by how awesome that video is. Anyway, so you're going to get you're going to get out. Oh, I was saying about how it's not an ad. It's not an ad. It's an opportunity for you to remind people what you do. Like that's all it is. It's just you have to tell people that that you are a bookkeeper, that I'm a bookkeeper, but not in an annoying way. Don't be annoying. Don't be slimy. Be natural and authentic and provide value. this is a good, like, this is a good thing that you just learned. Like, this is a helpful thing that you just learned, and it's an opportunity for you to get out there. So we teach you how to do that. We teach you how, and so yeah, so we teach you LinkedIn, we teach you Canva, Calendly, the methodology for actually doing that. And then the most important thing, well, we keep you accountable. So every day you're like doing the marketing, you're doing the tasks. And then the most important part of this group is that you're in a group and you are encouraging each other and you're getting out of your own way. Like we teach you how to move out of your comfort zone, because so many people, the number one thing that holds them back is themselves. Okay? Chances are, if like there is so much need for bookkeepers there out in the world, that if you are not getting clients, the chances are very good. Well, like I talked about on the workshop last night, there's a very good chance that you're not speaking the right language. But most of the time, what we see is that people are just not putting themselves out there. They're just not, like, how many people did you tell today that you are a bookkeeper? How many people, like right after this call, go out and tell people, hey, I just learned this cool thing about if you're using QuickBooks Online and and you have an external POS system, it's like super easy to just create this thing. So anyway, Kimberly, I'm so glad to hear that you enjoyed this as a newbie. Woohoo. All right, so the I think we're still open for the April cohort. So you can join the April cohort, and you can also, another thing that we have happening is the study hall. So if you go in the back in the Facebook group, we have This Week at Acadian. We have all of the things coming up this week. Well, today's the last one. How to register. If those of you who could not find the Zoom link, it's there. It's also emailed to you. It's also in my post. It's also in the event that we created, but it's here in this Google Doc. So you can join so you know where the Zoom is, but then you can also join the study hall. And the study hall, I'm going to stop the share here for a second now that you know where to get to it. How many times have you signed up for a program and not finished it? It just like sat on the wall and you're like, oh, I'm going to get to it. I'm going to get to it. I don't have time. We always will cancel things on ourselves before we cancel on other people. It's just a fact. We're just like that. So the study hall gives you an opportunity to gather with other people who are on the same journey, and you have an opportunity, like you show up, you set your intentions, you do the work, and then you do the work, and then you come back together and you celebrate each other about like all of the stuff that you were going to able to accomplish. People love the study hall, and if there's nothing else that you do, just come to the study hall and get your work done. Get it done. Get the exercises done. Whatever courses you're working on, you can do client work, you can do marketing. It doesn't matter, but it's an opportunity for you to gather with other people and just get it done. All right. Well, folks, that is it for me today. Woohoo! Oh, Stephanie says the accountability is what really helped me get the most out of the group. That was a huge part for me. Uya agrees. They're talking about I don't know whether you're talking about the study hall or the cohort. We used to, by the way, only offer the study hall for the people in the Getting Clients cohort. But it was so popular. Everyone just said, oh, that's my favorite part. That's my favorite part. And so we said, you know what? We're going to open it up to everybody because people love it so much. And also, I forgot to mention that the Getting Clients cohort is guaranteed to get you a client conversation or your money back. And if you're in the gym, you actually earn coupons as you're working through the gym. In the same way that you earn marketing prompts, you also earn discounts on the gym. So it's pretty cool. All right, let's see. Stephanie says, study hall has been a great way for me to get my butt in gear every morning. Plus, we are an amazing group of people. Yes. Sherry says the study hall is fun, along with being a great tool for accountability. We have some great conversations before we start working. Susan says, thank you so much. This was awesome. You're welcome. Chris says, thanks so much, Margie. This exercise is super helpful. I didn't understand it before you explained it. I didn't understand it before I taught it, as, as I mentioned. All right, let's see. Let's see. Dee says, I love the study hall. Tamaruni is and still asking about the fees. So yeah, so go back a couple of weeks when we talked about clearing accounts, because that's when I talked about the fees. You have to have you have to have a separate expense to come out of that. And of course, also Fast Track. Do we have a link to the Fast Track? I don't know if I gave a link to the Fast Track, but anyway. All right, guys, I think that is it. As I mentioned, oh, yeah. Yeah. I'm like, oh, as I mentioned, the cleanup workshop from last night was, what do the kids say? Off the hook? Is that the is that the right phrase? My first husband and I, or my first husband used to give me such a hard time because I was always using the wrong like phrases. He's like, that's not the phrase. Like, I don't know how he always knew like what the current lingo was, but but I never did. Anyway, so yeah. So last night's call was amazeballs. Corey, who teaches our cleanup course, is just phenomenal. And that replay will be going out. I don't know. Soon I will get a link, I think, and then there's like some special deal that's only for the next 7 days, I think. And anyway, lots of cool stuff happening here at Acadian. But I'm gonna let you go because it is Friday afternoon, and I'm sure you have places to be and people to see and all that. And good stuff. Good stuff. Have a great weekend. I can't wait to hear your success story.